Hello and welcome to the Weekend Investing Daily Bite of 16th of December. Market gave up some of the ground it made on Friday, but no harm done overall. I think bulls are just resting as some of the options buyers today were discussing why, despite market coming down, the premiums have not come off. So it does seem like the undercurrent is still very strong and the markets will take a leap at it once it gets an opportunity. Today's discussion is about Q2 FY results. Are they signaling hard times for the economy? We'll have a short discussion on that and the solutions for investors. Please do read the disclaimer and subscribe to the channel if you haven't so far. Do also click on the bell notification to get to know the new videos that are coming out from Weekend Investing. Now, as we see the Nifty chart, there was a huge candle that got formed on Friday. In fact, Friday first half we were about to break down big, but we did take support near the 40 DMA and moved back up and moved so strongly that it basically closed at a almost a 2-month high on Friday. So there was a huge sort of short covering, you can say, or end of the day rally that happened due to the squeeze, and that probably went into some excesses, and today some cool off was happening after that. Ideally, I would have wanted to see this continuation today, so to really trap the bears from this place, but it doesn't seem like market is that strong also. But nevertheless, I mean, it has not flopped back on itself, and likely we will maybe spend a day or two here and then move forward. That is looks like the likely move forward. 0.4% down on Nifty. Overall, Nifty is maybe just about 1500 points from its all-time high. So about 6 to 7% is what we need for a new all-time high. A consolidation here for the rest of the month, I think also is not a bad deal. Um, Given the fact that January will be more action-packed, US presidential outcome of the new president coming in and what narrative will come around after he assumes office, that will be key. And from somewhere second or third week of January, we may see some expectations from the budget, positively or negatively, I don't know at this point, but that's how the narratives will get built. One thing that will also be keenly awaited is the December quarter results, which will start percolating in from second week of January again. So January is likely to be the uh, you know the month where things may get decided for some more time. Also, many institutional investors are now calling for rate cuts in the Indian market. UBS, for instance, has called for a 75 basis rate cut in 2025, starting from February. I think if that theme also picks up, then certain sectors which are interest rate sensitives can do well going forward, like they did today. Nifty Junior, you can see a beautiful candle on Friday, and we actually moved above it. So this is very different from what happened in Nifty, which was resting as an inside candle. Nifty Junior actually moved above and closed 0.25% up. No big moves, but at least it moved outside that body. Mid cap even more so. Mid cap actually coming to the previous high, up 0.69%. So mid cap is not showing any weakness at all. Mid caps are now just about maybe 600 points from an all-time high and looking good right now. Small caps, similar picture, a bit weaker than mid caps, but 0.44% for the day and above this hammer-like candle. Always good to clear the ranges of such candles and sit above or below it. That is more likely of a trend than just be an inside bar. So on small caps, we are extremely close to a new all-time high, and that probably is coming in some more time. Banks were absolutely flat, 0% change for the day for banking. But just look at how it is poised. It has consolidated in this range for some time. Just one day is required to go to a new all-time high. And banks are looking good at this point. I think any indication of a rate cut will cause Bank Nifty to really zoom. In the momentum trends on the CNX 500 stocks, you had 265 advances to 231 declines. So fairly even distribution of gainers and losers. Nifty is still under the pressure of maybe FII selling. We had good selling in IT stocks, although banking were flattish. You had good selling in Titan, Levers, Bharti, Ultrasemco, NTPC. Several stocks were under pressure today. In the Nifty Next 50 space, you can see more greens, especially in real estate. You can see DLF up 2.5%, Lodha up 3.5%, capital goods stocks, ABB, Siemens, all up. Motherson's also up 2.86%, BHEL, Zomato, several stocks up here. Adani stocks continuing to lose some ground, 2 to 3% down on several of those stocks. Jindal Steel 2.2% down, and some odd stocks that were between 1 and 2% down. Sectoral trends, you can see real estate really zooming forward. I think real estate is getting a whiff of a potential interest rate coming in the next 60 days. Uh, this is a 3.1% on top of what has been going on for this last 1 month. So in this 1 month itself, real estate has recovered 18.1% as an index, which is phenomenal because the next in line is 7.7% of IT. So sorry, PSU banks at 8.7%. So this has really done very well. And if we see a 12-month perspective, then real estate is really hit the ball out of the park at 45.8%. So very, very good performance by real estate. I think on ground also, people are seeing that there is no let up in real estate. People have been calling this as a bubble for a long period of time and missing the boat. So, uh, I mean, you have to apply the principles of momentum to real estate buying also. Whenever there is a trend in real estate, it is not going to stop tomorrow. It is going to be a long cycle that starts. And yes, at some point, the real estate cycle will take some rest. At some point, the real estate cycle will go absolutely blank for the next maybe 5 7 years. But when will that point come is nobody's guess. We've been in this cycle maybe from 2021. The real pickup has come in the last 3 years only. So who knows? We may be in for next 5 years of more gains on real estate. Very difficult to say. But yes, I mean some pockets have become extremely uh, exuberant, and caution, of course, is always required when you're going to buy and sell. Metals, IT, commodity stocks, energy stocks lost some ground, and other sectors remained quite flattish for the day. If we see the real estate stocks, you can see that it is trying to break out of this flag. Really very good setup for real estate stocks right now. I mean, if they really go to the all-time high, they can really boost much, much higher in terms of this setup. Oberoi Realty up 6.5%, Prestige Estate 4.3%, Macro Brigade, Phoenix, all doing well. So the idea here, in my view, would be that if you are a discretionary investor, you should look for setups in real estate. Look for buying on dips here, of course, with stops if you are a trader. And if you are going with some momentum strategies, these stocks would have automatically starting to appear in your portfolios. Sun Pharma Advance is where the stock of the day is. It's gone up 6% today. It's remained flat for a significant period of time, but now it looks like it is starting to move out of this range. So let's come to the story of the day. Our Q2 FY25 results signaling hard times. Let me first give a disclaimer here that at Weekend Investing, we certainly are not watching the results basis which we buy or sell in our strategies, but this is a general content suitable for all kind of viewers, and I certainly will give our take on uh, this trend towards the end. So, we are seeing these kind of headlines in the media. Profit apocalypse: 10 companies with steepest losses in Q2. Who blew it the worst? This was the news item today. Q2 earnings shocker: 36 BS 500 companies report 50% profit plunge. Another headline recently. Key highlights from the NSE earnings stats have come that Nifty 500 companies profit growth has declined by 1% in the September quarter. So September quarter versus last year September quarter, average profit growth of Nifty 500 companies is down. Now that is not certainly good news. Earnings slowdown has affected largely 8 sectors, including cement, telecom, retail, and oil and gas. From more from the highlights from NSE is that Nifty 50 stocks the index 50 stocks have reported a 4% year-on-year growth in profit after tax during the same time period. So again, I mean, we are trading at 25 times. I mean, if I were to use the conventional hat of a fundamental investor, uh, 4% year-on-year growth in profit is pathetically low for a market which is trading at that kind of multiple. So this marks the second consecutive quarter of single-digit profit after tax growth for Nifty 50, and this we saw last only in 4 or 5 years back in June 2020. So these are the Q2 disaster list, the losses uh, seen in Vodafone, Saman Capital, Indian Oil, Interglobe, MTNL, Unitech, Mangalore Refinery, Chennai Refinery, Chennai Petroleum, and NMDC Steel, and Ola Electric. These are the Q2 losses which have taken place. And of course, despite these losses, some of these stocks have continued to do well in the year-to-date returns. But of course, Vodafone is the leading the pack down. The highlights from BSC earnings is that September quarter was the worst since early 2020. 36 BSC 500 companies have reported a 50% year-on-year declines, and auto and banking sectors have exhibited cracks in the growth and quality of stocks. This divide between urban and rural markets, this is what is being talked about the most, that urban markets are experiencing weak consumption demand. Earlier in the previous quarter, if you recall, there was a lot of talk about rural consumption falling off, and excluding oil marketing companies, Q2 PAT growth for BSC 500 companies have dropped 8%, and most sectors except the banking and finance sector showing a slowdown in growth. So this is painting a quite a poor picture in terms of where the markets are looking at in terms of fundamental data. Now, what happens usually is that markets run ahead of what is coming, and most likely than not, all this data that we are seeing now, a significant part of it is probably already discounted in the markets. A lot of folks react to results as they come out, but the markets always sort of precedes them and has already discounted what is likely to come out. So from my perspective, a quarterly result is a rear view mirror snapshot of the last 3 months. It is telling me nothing about the next 3 months. But a lot of folks like to do, extrapolation on Excel, that if this quarter is down year on year so much, so the next quarter may also be down, or maybe the trajectory will continue. But there is no such thing. I mean, markets turn around like this. Companies and economies also turn around very quickly when they do. So there is no extrapolation that is easily possible. And the best barometer for gauging how the market is doing is the market price. The BBC principle, Bhao Bhagwan Che, is the final authority in terms of where the market is gauging where the economy is. If the economy was really bad, you would not be seeing Nifty 5% from all-time highs. Or if the market is at an all-time high, it probably is because of a reason that nobody is willing to believe, at least, that the economy is in such a bad shape, and that may only happen once the liquidity draws out from the market, and that is not looking like coming anytime soon. Now, here is a long list of stocks that have also seen huge drops in Q2 profits, and you can see some very big names that are there: BPCL, JK Cement, Ramco Cement, Prince Pipe, Shree Cement, Dalmia Bharat. So a lot of cement stocks are there, and they are also very cyclical. So it is just not this quarter's issue. Maybe there is a capex that is happening, which is causing these kind of profit figures at this stage of the and some others like Tata Tech, Granules India, Tata Motors also, JSW Steel, and Apollo Tyres. So very, very difficult to gauge from quarterly or annual results where the markets or for that particular stock is headed. But if you follow the price, you will get that indication much, much earlier, and probably more surer in terms of how and when to get in, how and when to get out, and just not be caught in the headlights like a deer in the headlights and don't know what to do when the price has already come down. So for for momentum investors, I mean, no action is needed. The strategies automatically take care of themselves. The weak hands will drop off. The new winners will come in, or either you go to cash or you go to the next best strength in the portfolio that you have. And if it's a long-term basis investing strategy that you have, then you must, of course, not focus on these quarterly results, but on the larger picture. Even if you are a fundamental investor, that the larger picture of that company should not be changing. So I always say, and I don't know whether you will agree with me or not, but you should know why you've bought a stock. If it is a price-based entry, then a price-based exit is the best, because that's the reason why you bought it. The stock was going up, you bought it. Now the stock is not going up anymore, you have to get out of it. If your thesis was that the earnings have to grow in a certain trajectory and hence I'm buying a stock, then the trajectory, if it has been disturbed, you need to relook at your thesis. If your thesis was that I'm going to buy this company because it's a great management and it has done very well in the past 10 years, so then don't focus on this quarterly result. Wait for the next 5-10 years for that management to perform. Maybe you'll get lucky. So depending upon what is your entry focus criteria, you should be focusing on the exit basis, that only. Don't enter into a company that has done very well over the last 10 years, but then the first quarter result is bad and hence I'm getting out. That also is not the right strategy. It's like having a long-term entry but a short-term exit. These two should never be combined. If you have a long-term focused entry, do a long-term focused exit. If you have a short-term focused entry, do a short-term focused exit. That is the kind of thing that usually will help you in helping the keeping the sanity of your portfolio. And earnings, as may not be very predictable. A stock with weak results can also perform very well in the future. So again, depending upon what is the basis of your investment, you should be looking at either a restructuring of your portfolio, exit from something, sitting into cash, or so on and so forth. But don't overreact immediately on short-term outcomes of such kinds, because that is not the purpose with which you got into your portfolio. So decision making, conclusions on quarter results can be very, very risky. Stick to your strategy regardless of whether you're doing quant based momentum, or you're doing fundamental investing with, or quality investing, growth investing, whatever may be your strategy. Stick to your strategy, and basis that, take decisions in your strategy. Let us know how you are managing your portfolio, and how are you going to maneuver if certain hiccups like this come into your runway of your portfolio. Thanks so much for watching. Do like and share these videos, and do subscribe to the channel. Thanks. Bye.